Hello there. Today we are going to discuss about the type of accounts based on their nature. So we can classify accounts broadly into two categories. First category is called the personal accounts category, and the other is impersonal accounts. Under these two categories can be further divided into personal accounts can be further divided into natural persons, artificial or legal persons, and representative persons. And on the other hand, impersonal accounts can be classified under real account and nominal account. So if we look at carefully, we are going to have three kinds of account. First is personal accounts, disregarding the fact that they are natural, artificial, or representative. And second, real account, and third, nominal account. Now, before we delve into details, let's first understand what these accounts are. So, first of all, what we need to do is understand their definition. So, first of all, personal accounts. So, personal accounts are normally accounts which relate to people, and those people could be natural people like Ram, Sham, David, Christian, anyone. They can also be artificial persons like ABC and Company, XYZ Partnership, etc. And they can also be representative persons, where one person represents another person. So let's go to definition. Personal accounts. Personal accounts relate to persons, which here means real persons. Trade receivables, which are basically debtors, which arise when we sell goods for credit, or trade payables, which is basically creditors which arise in course of credit purchase. Example would be the account of Ram and Company, an artificial person, a credit customer or creditor, or the account of Javeri and Company, a supplier of goods. The capital account is the account of the proprietor, and therefore it is also personal. Why capital account proprietary person? Because the amount that a proprietor, owner of a business, invests into his business is treated as a liability towards that person. We will deal about it in detail in business entity concept, which says that the owner of the business and the business are two distinct entities, and whenever we are doing accounting, we have to think of ourselves as the business. So capital account is also a personal account, but it's suggested for profits and loss made to it, because we understand that profit and loss are reward for taking risks. So any profit or loss incurred by the business is actually profit or loss of the proprietor. So profit and loss are adjusted in the account of proprietor. So as we had seen earlier, that these can further be divided into natural, artificial, and representative persons. Let's see what they are. Natural personal account. It relates to transaction of human beings like Ram, Rita, etc., or simply real persons. Artificial or legal persons. For business purpose, business entities are treated to have separate entities, as I've already told you earlier. They are recognized as persons in the eyes of law for dealing with other persons. For example, there can be different kind of business constitution like a proprietorship form, a partnership form, a limited liability partnership form, a private limited company, a public limited company, a trust, and the list goes on. So all these persons are artificial or legal persons recognized by the law. So for example, government is a legal person, an artificial person, companies, private or limited, clubs, cooperative societies, etc. And third, representative personal accounts. These are not in the name of any person or organization, but are represented as personal accounts. For example, outstanding liability account or prepaid account, capital account, drawing account. So what they do is they are not actually accounts, but they represent generally a liability towards a person. For example, whenever we incur a liability or an expenditure or purchase an asset for which we do not make a payment immediately, so we have a liability in the account. That liability or outstanding liability is also a personal account in representative capacity. So liability account, prepaid account, prepaid expenses, prepaid income, advance incomes. Capital account, as already explained, represents the claim of the owner of the business in the business. Drawings account, basically withdrawal from the capital. All are personal accounts. Now, under impersonal accounts, we have two categories which we had already described, which are real and nominal. So the accounts which are not personal, such as machinery account, cash account, rent account, etc., these can be further subdivided as well. So basically, real accounts are accounts of assets, real assets, other than those already covered under the category of personal accounts, like debtors. So real accounts, accounts which relate to assets of the firm, but not debt, because that is already covered under the category of personal accounts. For example, accounts regarding land, building, investment, fixed deposits, etc. are real accounts. Cash in hand is also a real account, so it's a real asset. Now, nominal account. Now, as you can see, this is the residual head after discussing all the type and nature of accounts. Nominal accounts are basically accounts of incomes and expenses and profits and gains. So, and when we club all the nominal accounts together, we actually get net profit or loss. We will see that in detail in later videos. So let's go to definition. Accounts which relate to expenses, losses, gains, revenues, etc. Like salary accounts, which represent salaries paid by a business. Interest paid account, commission received account. Interest paid account, salary account are business expenditure, while commission received account is an income. The net result of all the nominal account is reflected as profit or loss, which is transferred to capital account as already discussed above. Nominal accounts are therefore temporary because at the end of the year, when we go for preparation of financial statements, which includes profit and loss account and balance sheet, all the nominal accounts are transferred to those income statements like profit and loss account, trading account, manufacturing accounts, etc. Okay, we will discuss these in detail in later chapters. So I think we have described in detail what are the types of accounts. Basically, there are three types of accounts if we talk directly about them, and they are personal, disregarding their subclassification, real, and nominal. So another thing is that one of the most important things about accounting is that if you know how to pass a journal entry, you know the accounting. The steps that follows journal entries are very mechanical and procedural in nature, and you can do them without any problem. So the first and foremost step is learning how to pass journal entries. So in order to pass journal entries, we need to have knowledge of the rules concerned with a different type of account. So for accounts, let's start with personal account. The personal account, we have the rule debit the receiver. First, I would like to mention that since it is a person can be either a receiver or a giver. So in personal accounts, we have the rule of debit the receiver and credit the giver. Debit the receiver and credit the giver. Person who is giving to the business debit the receiver. Person who is receiving from the business should be debited, and the person who is giving to the business should be credited. Debit receiver, credit giver. Second account, real account. Real account basically represents assets account. So in the business, we have to say the two cases could be either an asset is coming into the business or an asset is going out of the business. So the applicable rule is debit what comes in and credit what goes out. So if an asset is coming into the business, we will debit it, and if an asset is going out of the business, we will credit it. Third category is nominal account. As we have discussed already that these accounts represent expenses, losses, incomes and gains, and ultimately they are transferred to profit and loss account to find the net profit or loss for that period. So we need to understand how its rule goes. Its rule goes like debit on expenses and losses and credit on incomes and gains. So I think we have understood the classification of account on the basis of the nature, that's personal, real and nominal. This classification is very important in order to understand the accounting treatment that we will give while passing journal entries, which is a very crucial thing to learn. Because if you learn journal entries properly, you will never have any problem in accounting. So see you in next video. Thanks for watching.